Welcome to the next edition of Grid Forward Chats. I'm Bryce Yonker with Grid Forward. Today we have with us three CEOs and founders of exciting energy companies, and we're looking forward to dive in with all of them. Kaitlyn Albertoli is with Buzz Solutions, Bill Burke is with Virtual Peaker, and Josh Wong started Opus One and is now over at GE. Thank you all for being on.
Thanks for having me.
Thank you.
Kaitlyn, let's start with you. Can you do a brief introduction of yourself and what Buzz Solutions is?
Sure. Thanks so much for having me. I'm excited to be here. I'm Kaitlyn Albertoli, co-founder and CEO at Buzz Solutions. At Buzz, we're an AI-powered platform analyzing visual data for power line inspections.
Awesome. Thanks, Kaitlyn. Over to you, Bill. What's Virtual Peaker?
I'm Bill Burke. I'm the founder and CEO of Virtual Peaker. We have a self-service SaaS solution that helps utilities manage programs with distributed energy resources, from customer engagement to load forecasting to, of course, DERMS, controlling devices and monitoring those devices. I am the CEO, so I lead the company. In addition to that, I lead product and product strategy. I like to stay really close to our customers and build things that they want to buy and what they want to use.
Thanks, Bill. And Josh, I know Opus One's a little bit of a former role, so tell us a little bit about the position there at GE and not the whole history, but what happened with Opus One there.
Might take a while. So Josh Wong, founder and former CEO of Opus One Solutions. We are a DERMS company focused on helping utilities manage the grid upon a high penetration of DER. So, of course, DERs can mean a lot of things to a lot of people. We like to focus on the infrastructure side. So how can we alleviate any concerns around the grid accommodating a high penetration of renewables to net zero? Happy to share that, of course, in around New Year's 2022, Opus One was acquired by GE Digital. So we are now a part of GE Digital under their grid software division. And since then, I've also looked at the next big wave. So successfully transitioned my CEO role to my former COO, Kimberly Helm, who's now leading the Opus One engine, while I'm actually looking at the grid of the future. So really a bit of a broader, big picture thinking of where innovation will take the grid over the next 10 to 40 years.
Well, it's really exciting to have each of you. We don't need to put you in a box, but the idea was to have a conversation with companies at different stages as we talk about what it takes to bring an innovative solution onto the energy system. And we really appreciate each of your perspectives. I'm going to kick this one over to you first, Bill, and then we'll go around the horn. What are some key barriers for grid modernization solutions coming onto the energy system?
That's a good question. So I think that the software is obviously key, at least from my perspective, on how utilities bring on innovation. And I think one of the big changes in software over the last 15 years has been the introduction of software as a service, something hosted by the partner and lives in the cloud, and then the utility just uses it. Tremendous benefits to SaaS with things like continuous delivery of software, scalability of services, things like that. But it's not something that utilities are particularly used to. They are used to on-prem solutions that are behind their firewalls and locked down, and nobody can get to them except them. And that this is a challenge for them to, I think, adopt a lot of the new software. They have to get used to things like, how do you deal with the cybersecurity aspects of SaaS? This is a big deal. It's not locked behind the firewall anymore. It's in a third-party cloud. They have to get used to how to pay for it. So again, on-prem solutions are great because they oftentimes can capitalize those solutions. They can't. Capitalizing SaaS is a little bit different. So I think that is sort of a fundamental issue with how they adopt new software that's going to really help do interesting things with their grid.
That's a good start. Kaitlyn, Josh, other barriers you want to kind of lay out to start here?
Sure. I have a point to add on to that. It's interesting because talking about software and SaaS and how that's really been a big transformation for a lot of these utilities to work with, we've seen that the collection of data has been a really big addition to at many utilities, inspection work, their way of monitoring their grid, and also as they're looking at maintenance plans and how do they upgrade the grid. A big part of it's coming down to they're starting to collect so much more data and get almost real-time insights now into what's happening on their infrastructure in various parts of their grid that they didn't have as great a visibility into before. And we see it's pretty interesting because this wave of the digital transformation has come quite quickly for utilities. And we've seen that whether it's transitioning to cloud, to figuring out how to work with data security and privacy concerns, things like that, those are some of the key issues that utilities are grappling with. But also, as they're collecting so much of this data, figuring out how to turn that into actionable insights and prioritize information has been really key for these utilities, figuring out how they can go from an organization which historically has been more siloed to how can they bring these different data sets together to turn them into critical actions. And so we see that many utilities are grappling with that today and figuring out innovative solutions for dealing with that and managing that data and turning it into key information has been a pretty big part of the conversation.
Yeah, I think I agree and certainly concur with all of them. The one around SaaS is interesting, right? It's one big part of the business model, but it's rewarding utility. It's understanding the utility remuneration model such that it rewards continual innovation and improvement rather than just a one-time fixed cost. But overall, in general, the regulatory and utility business model barrier must align that of the utility and its participants, right? Whether those are like DERs or market participants, whatnot, because increasingly the grid is not, or the utility's role in the grid is not just that of building, constructing, and maintaining assets. It's also one that supports and enables the wider ecosystem. And in order for us to do that, utilities must be remunerated based on their, I think, prudence in investing and maintaining infrastructure, but also their ability to enable and support the wider ecosystem. Agree with Kaitlyn as well, the data. So intelligence is the key to unlock the future. And data is always, we think software is always going to be cheaper than coppers and wires and oil, but the data quality and the data availability is not in a way to really enable the next wave of grid intelligence. So we need to break that barrier, right? To not just collect data, but really making sure that it's clean, it's usable, it's actionable, as Kaitlyn mentioned. Probably the last one I would like to add is the pace of innovation. It's related to the SaaS model, but I think we all hear the notion of utilities piloting to death or pilot purgatory. That's still today, I think, a big barrier towards innovation. A lot of innovation departments' agendas are still sometimes tinkering or sometimes can be named as skunk works or science projects. At the same time, we need these innovation to scale to mainstream as quickly as possible. And I think startups have a role to play, large companies have a role to play, academia, national have a role to play. But the ultimate customers are the grid or whoever's operating grid, or unless to DERs. So that's a whole innovation cycle must be sped up, and we need to address that head on.
Yeah, let's tackle that topic. That was something I wanted to cover. I think the idea of death by pilot is still very real in the utility landscape. So how can we break free of that? How can innovations find pathways to scale and bring the real commercial impact that we need? I'll send it over to you, maybe first, Kaitlyn, and then I know we'll all jump into this.
Sure, it's an active conversation that we're having quite frequently, especially here at Buzz. We're an earlier stage startup company, and what we found is that there's so many innovations that are tackling different parts of the utility process, different parts of the utility workflow, but where we've seen the most success in overcoming that, death by pilot or continual piloting phase is finding a way to embed ourselves fully into the workflow of a utility. We see that labor is a big constraint for many utilities, evaluating new technologies and then bringing them into the fold. And much of the time, utilities are operating almost from a point of behind. It's all about taking action once they've received information, as opposed to being proactive and preemptive in decision making. And so our ability to plug into that existing workflow to enhance the offering that we're delivering to that utility customer and to really bridge the gap between two types of data sets they may have has been our key to success in overcoming that process. We do see that many with many utilities, with especially when it comes to collecting data and turning that data into action. If we're able to plug into existing infrastructure they have in place and work and train their existing linemen, field technicians, team members on a platform that already is a part of their day-to-day process, then that can typically have a much faster time for uptick. Thoughts
on this, Bill?
Yeah, I think that the death by pilot is really a critical issue with investor-owned utilities primarily. And, they pilot innovative solutions. They have innovation teams. They sunset pilots after running them for a little bit, which is painful for a startup's revenue, obviously. But I think the worst part about this pilot process that they do is they create this choppy customer experience because they've got all these vendors in there all trying to touch the customers, doing potentially different things, and it's not good. It's really hard to get out of that. I mean, I echo what Kaitlyn said about embedding in existing workflows. That's really important. But one of the things that we've done is really focus on the entirety of the market, not just the investor-owned utilities. Co-ops and munis don't do pilot hell forever. They typically, in fact, don't even run pilots. They'll run actual programs. They'll know what they want to do, and then they'll go do it. Obviously, the prize is a lot smaller with a mid-sized utility versus a gargantuan investor-owned utility, but the longevity on them is fantastic. And that has helped us bridge the gap between the pilot phase at IOUs while still building our credibility in the market with long-lasting programs. I don't know the silver bullet though. I mean, I don't know if there is one. I'm pretty sure it's not innovation teams at IOUs though. I'm pretty sure.
What is it, Josh? What do you think? I mean, you brought it up as an issue. What do you think can kind of alleviate the concern some?
I think innovation teams has their role, but I think it is our experience as well. That's they can be more science experiments with a very certain fixed time frame. So I think the ask and the call is for the innovation team to also dig deep into their business processes and functions to make sure that there's a scale up available. And I have seen some improvements over the years, but this is a continual work in progress. I think to Kaitlyn's point, embedding workflows is a great one, but ultimately, like product management 101, right? We assessing product market fit, offering a value proposition that customers will pay, and that's how longevity in terms of impact. So what that means to me over the years is one is we would need technical modes and differentiation, but also dial back some of the complexity so it becomes immediately usable to provide a certain value prop. Another lesson that I've learned is there's a lot of horizontal functions, but especially with utilities, a vertical solution will likely work better because of its longevity of time frame. Now, of course, we're part of GE, so I think one of the decisions and objectives of joining a much larger company that generates 1/3 of the world's electrons is because we see there is a role for startups to drive and make a disruptive leap in the pace of innovation. But there's also a time and a place for incumbents to really step up and take their place, especially given the time frame that we have around the energy transition. And so really for startups and incumbents to work together and access those data and the mission critical processes that is dominated by, let's say, today's planning and operational solutions such as the ADMS, I think that's critical. So incumbents need to open up and startups need to really be able to partner in a much bigger ecosystem where mission criticality is key.
So this is a big question. You touched on some of it, Josh, so I'll let you all take whatever pieces of it you'd like. But I would say the cycle to bring solutions to utilities, especially if it changes their business model, if it requires regulatory approval, if there are operational changes, if it touches customers, if there's financing, if it changes the culture, and there's a longer list. But if any of those things need to adjust, it can be a bit long and painful. How can companies survive this? And are any things going to materially change that abbreviate this or make this less lengthy or painful?
I guess I could start out on that one. to Josh's point, I think what's really interesting is the utility adoption cycle. There's so many different pieces that kind of come into a faster or slower adoption time. And what we've seen is that a company that can specifically solve one pain point for a utility, and it can be as focused as possible, at least to get in the door, that typically is the fastest way to have the product or the solution adopted, and then growing and expanding on it from there. But at least getting that quick in where it can have a very fast ROI for the utility to prove out the value, to demonstrate that there's a real product market fit, and then also that there's a, to get that utility buy-in, I think is critical for success, to your point of success of the company's longevity in the utility. When a company, especially a newer, more technologically advanced innovation comes into the fold, trying to tackle too many things we see can ultimately be the death of that, either that pilot or of the long-term success of that project.
Yeah, I definitely want to echo that. That's a great point. Back in 2015, when I founded Virtual Peaker, our tagline was making demand as controllable as a gas turbine generator. It's a pretty big mission, but no utilities were buying demand as controllable as a gas turbine generator. So we had to implement demand response. That's what they were buying. And by and large, that's what they're still buying in many respects. So being able to, have that big vision, but then actually deliver something that adds value to the utility is super critical. And I'll never forget, I was talking to Ron Hoffman, one of my old advisors from Berkeley, and he said, if it will make utilities money or save utilities money, they will adopt it. And it's really that simple, right? You have to find something that makes utilities money or save utilities money. And if you can do that, then the adoption cycle's a little bit easier.
Yeah, I think each founder, CEO, each company has to choose their own strategy of how they want to navigate or address the space. I think it's a reality of the nature of the industry that it's a mission critical infrastructure. So time is required. There's overall conservatism. It's a monopoly, regulated monopoly type of industry. But if we want to maximize utility adoption, the easiest would be a services company. Provide some billable hours and you can provide immediate value to the utilities. Or if you want to be more product-based, look for process automation type, be very specific on automating some scripts or whatnot, and that will be very good too. But it's going to be a fine balancing act if you want to start inserting more technical depth or differentiation, which will take time to prove out and justify as small, young companies. And that requires capitalization, that requires maybe some labs for experiments, and time will tell. But that's a very different play than services-based companies. So really it's know yourself very well. What are you very good at? What are you passionate about? What's the big, hairy problem you want to solve? And make sure that you rally customer feedback and validation as well as investors around that problem to solve.
Yeah, so just to add on a little bit to what Josh was saying, like utilities, they all have their own challenges, they all have their own problems, they all have their own way of thinking about the problem and what the solution should be. And so there's a risk in overbuilding for a certain utility and then not having something to give to somebody else. So you basically build a custom solution. That's particularly challenging, I think, in the software space where people think software is easy. You just go write some code, you hire some people, and it's done. And that's, it's not really reality. And so making sure, what we've really been really focused on is how do we build a solution for everybody? And, so we cream off the best stuff from the ideas that the customers have and make them squint in order to see their original solution potentially, but we end up with something that can address many, many utilities' problems as opposed to building that custom solution for one and getting locked in an innovation cycle with one utility that results in nothing good for anybody else.
I would love to add on to Bill's point. I think that that goes back to the business model side of things as well. How can we as companies create a business model which aligns with a utility's incentives and aligns with the way that they, successfully build their rate cases, things like that, but also create a solution that is not a fully customized consultancy shop based solution. And so we've seen that, at least from the data side of things, that it's about providing a core product and then providing the flexibility to integrate into different parts of that workflow, or to build the services around the core offering in a way that it does, to your point, look exactly how a utility needs it to look across the whole landscape. But underneath, it's really still the core same offerings that you're delivering to that end customer.
And I love what Kaitlyn just said, right? Because it's probably the most underappreciated barrier to entry and differentiation, which is the integration into utility workflows and their data systems. Typically in startups, we always want next big science sort of breakthrough in order to build technical differentiation. But for this industry, actually, just understanding the domain expertise and understanding how utilities operate and being able to understand what data systems are there, that in itself is a gigantic moat.
So circling back on this, like, what are the barriers? What's the adoption cycle look like? Thinking about, like, it's weird how utilities in many situations, at least in our space, are focused on in silos. There's silos in all the large utilities, right? The EV team doesn't talk to the thermostat team, doesn't talk to the water heater team, doesn't talk to the customer engagement team, and there's all this weird use case specific stuff that they do that's pretty siloed, and it ends up being like a technology class that could address many of those use cases. It doesn't necessarily get adopted for the different use cases because they're on different innovation cycles. Like for us, right, thermostats are in this relatively static area. Not really static, I don't want to say it that way, but it's an old technology. But now EVs are this hot technology that everybody's in, all the innovation money's flowing to. They've got different budgets, but really from a technology company standpoint, there's almost no difference. They're just APIs to talk to and aggregate and control and provide customer engagement with. So the understanding that innovation cycle inside utilities is also critical to understanding how to go after them.
And that's what I wanted to explore a little bit is that culture of innovation. Where is it in the industry right now?
That's a very challenging question, and we should do a business school case study of it. The politically correct answer is everybody's trying to innovate, all the way from the board level to every single, like if you talk to any utility right now, no utility will say, hey, we're not trying to innovate. So I think the will and the desire is absolutely it. But I think who are those that are able to innovate? I think over the years is we don't really need to go to address just the innovation departments. I think there are innovation champions wherever you go, and I'm seeing a bit of an acceleration of that with new hires, especially within utilities. The average age is really lowering. There's a lot more hiring from outside the industry that has gone through innovation transformations already. Customers and regulators even are also pressuring utilities to change and move faster. So my personal belief is just dig deep and find the right change champions internally. I've seen them in planning, I've seen them in operations, absolutely in customer service, and of course in R&D and innovation teams, even in finance, right? So I think spend your time and really know your customer and audience well.
Yeah, I think that's a really great point. Would love to add on to that. I think the innovation team is that real guiding force for many utilities, figuring out which department may have raised their hand previously to say, we need a solution for this problem, and ultimately that's where resources can be funneled a little bit faster, or they serve as a great connection point. I did want to touch on Bill's earlier point as well about IOUs, looking at the landscape of IOUs for evaluating new technologies and new services. We see that so frequently the IOU in the region sets the standard of what's the next innovation to be explored, adopted, and scaled. And then many of the smaller unis and co-ops will follow suit after that larger player in the space. At least from what we've seen, we do see that some of that's starting to change now, where many munis and co-ops are taking on more responsibility of evaluating some of these innovative solutions, and whether that's through more local focused groups of co-ops or munis that are coming together to evaluate some of these newer solutions, or whether that's individual co-ops taking on more of that responsibility. But I think that's exciting to see, and that will continue to change the landscape of how newer technologies, one, are evaluated, but then two, how they can be adopted and scaled more efficiently. I'm hopeful that we'll see many of these other smaller utilities take more of a stance in being the first ones to evaluate innovation and then scale these technologies to set a new standard.
Yeah, I'd add on. I'm going to put two topics together here from what Kaitlyn said. Like, the first is the innovation teams. Like, which innovation teams have I seen personally that drive the most change? It's ones with a budget. If the innovation team can actually do adoption and push technologies and actually do things, that's, I think, the most powerful kind of innovation team, and the ones that can actually get stuff done, as opposed to just the connector type of innovation teams. And back to getting the stuff done side, the co-ops, what's awesome about the co-ops in particular is they just get stuff done. Like, they have an internal culture of moving and adding value to their customers and going fast and doing stuff. So it's allowed us to do a lot of really cool stuff in pretty good size scale too.
Yeah. So let's talk about money, and then we'll have one last question. So feel welcome to share your own rounds and what it's taken to get you, or just reflect more generally. I was talking to one of the major small modular nuclear reactor companies yesterday, and they've put in 1.4 billion just to get to where they're at now. So some of the solutions just need jaw-dropping levels of capital to bring their system to the industry. But in general, how is the landscape for raising funds? Where do you think it's going to go here in these coming years, as far as innovative energy solutions companies being able to raise capital? And what does it take? What sort of capital does it take to bring? Obviously, it's a little bit different for a SaaS software company and these digitally enabled solutions versus actual hardware. But what does it take to bring grid innovation to scale by way of the funding that's out there? Bill, maybe you can start, and then others can jump in.
Yeah, it's SaaS businesses can be pretty capital efficient, and hiring some developers, being a developer myself, you're able to get stuff that works and can be put in utilities. So that's one thing, but customer adoption is potentially a different thing, and it seems like, especially with the large investor-owned utilities, my impression is that they use the size of funding rounds as a hedge against whether or not you're going to be alive in a few years, which is by and large probably a good bet. But it makes the capital efficient business a little bit more challenging, because you raise a big round, investors expect a lot from you. But we did follow, it sounds like, I don't know Josh's story so much, but we did follow that sort of strategy by and large.
I think the space is interesting because more capital does not necessarily correlate to faster success in this industry. And it is really an industry that requires a lot of patient capital. And so we've taken a similar approach to be a bit more conservative on the capital that we're raising and try and be more capital efficient to prove the product market fit, to prove the value proposition, and then use that utility ecosystem of customer referrals to be able to generate more interest on the sales side of things. But really, we do see that the capital in the space is for the patience needed and required to achieve some of this success, because it's one thing to demonstrate product market fit, but as we've definitely touched on here, the long-term utility adoption cycle is one that does require a good amount of time. And so in order to keep the business alive. But what we've seen is, I think we're seeing a very favorable time in the market right now for investing in this particular space, investing in infrastructure, investing in energy efficiency and climate tech and things along those lines. There's more and more money that's coming into this space, whether it's the government funding or it's venture or private equity. We are seeing that it's becoming a more favorable time to start a business in this particular sector.
Yeah, I think raising money is like making money to feed my family or to feed my shopaholic habits. We all like to spend, but sometimes we need to make money as well. So how do we make money to invest into the company? Opus One story as well. We were started in 2011, so we first self-funded and basically research funded the company. It wasn't until 2015, 2016 that we closed our A round. It's a small round. I call it Canadian A, so which means it's a US seed because we are always slightly smaller. Then 2018, we raised our Series B, which is comparable to a USA round. And then 2021, we were doing our dual track to see Series C or potential acquisition. We had multiple term sheets on the table, but ultimately we think it's time to not, I wouldn't call it exit, but it's time to take it up a notch. And to take it up a notch is let's use ourselves as the change agents to really move the space because we have always been, I would say, mission oriented. So that's why we made the decision. So I think the nature of the business is we always need to raise. Agree with Kaitlyn as well that it's not all money, not all capital is made equal, especially in this space. It's very, very hard to find like-minded investors that can truly be partners. And I would say it's even harder, or I'm assuming because I'm biased, but it's even harder to raise VC capital for a software company in the energy space, because most of the VCs that are used to investing in this space either like deep sciences, like SMRs, like nuclear reactors, or they like hardware where volume is everything, like create the next big box. But now if you want to bring in software companies that has a bit of an impact or a software agenda, they'll start applying software metrics and software timeframes, which can often be a bit disappointing in for a lot of VCs in the energy space. So I found myself often saying that, hey, either the utilities don't move in power to death, or once they move, they give you a 7 or 8 figure project. So that's our game. That's the nature of the game. And so we need patient capital. But once this market flips, you get really, really big because the scale is absolutely there. And also the applicable addressable market is very homogeneous. So how we address the grid in Toronto is similar enough to New York and Boston and San Francisco is similar enough to London or to Melbourne, Australia. So I think there's a lot we can apply that can scale fairly quickly. It's getting to that scale and having the right partner to scale with you.
Great. So let's do our final question, and it can be a bit of both of a recap and anything we haven't had a chance to cover yet. So what would you say is especially critical when it comes to navigating bringing an advanced grid modernization solution to market?
I'll go back to something I said a minute ago, and you have to make or save utilities money. If you don't do that, then the adoption cycle is just brutal.
On my side, I'll say no one can do it alone. Opus One could not have done it alone. Even GE, we can't do it alone. So I really see increasing value in an ecosystem approach where startups can work with incumbents, with utilities and regulators as well in joint partnership, because we are addressing an ecosystem here. And to put in a shout out, that's why I think forums such as Grid Forward can help in terms of bringing people together to solve big problems worth solving.
I would say it's a matter of prioritization. I think that prioritizing the need for new innovations in a way that we can see successful adoption of those, one at a time, clipping off successful innovation and deployment one by one will, have an even greater value. And that comes with a great amount of collaboration and working with multiple utility workflows and also partners of utilities as well. And so I'd like to see more of that as we're continuing to enter into this grid modernization space even further.
Well, fantastic. You all are each charging the way and bringing some really exciting things to the system. So thanks for sharing your insights with our community today, and look forward to collaborating with you all ahead. Thanks for being on.
Thank you, Bryce.
Thanks, Bryce.
Thank you so much.
Thanks for listening to this episode of Grid Forward Chats. If you're interested in Grid Forward membership and our work to accelerate grid modernization and energy innovation, including the backlog of our podcast, visit us at gridforward.org. If you like the podcast, please share it with your friends and colleagues and give us a rating on your favorite podcast app.